Hello out there, everyone. It is Colby the DGI Crab coming at you with the Great ETF Race, episode 14. This is the first episode here in 2025, and I am very excited to get off to a strong but steady start. I'm going to challenge you all here today. If you have not been consistently investing of late, now is a great time. If you have a New Year's resolution that you haven't made just yet, let's make one to invest consistently each and every week or every other week. Maybe you get paid every 2 weeks like a lot of us do. That's fine, every 2 weeks. But the most important thing is to be consistent. We're not trying to time the market. We want time in the market and dollars in the market. The Great ETF Race, if it is your first time here, I am investing $5 into 8 very popular dividend-themed ETFs to see how they will perform when going up against each other with equal footing and dividends reinvesting back into the ETF that paid out said dividend. And the point of the series truly is to show that anyone can invest without a lot of knowledge or a lot of desire to learn about individual stocks. You just pick a one or two, heck, maybe even 8 ETFs, and you just dollar cost average into those each and every week or every month, whatever your consistent theme is going to be, and let that dividend income pile up. So as you'll see here, we had Monday off yesterday for Martin Luther King Jr. Day, and so my $5 investment actually went in today. I'm doing this on the SoFi platform. SoFi is one of several brokerages that makes it very easy to invest as little as $5. You can set it up and have it happen automatically, so you don't even have to check in. It can just be put on autopilot, and you can invest consistently week in and week out, or whatever frequency you desire. And after taking the last couple of weeks of Great ETF Race off, thought I'd let this just kind of sit and compile a little bit. You can see now I've got $150 invested into all 8 of these ETFs. Currently, as of today, VYM is very slightly in first place, just slightly ahead of VBR. So high dividends from Vanguard versus small cap value from Vanguard. These two are the front runners as we begin the 2025 year. DHS and VIG in third and fourth place. They're very close together. DGRO and SCHD manning the 5th and 6th spots, followed by State Street's high dividend yield SPYD, and then finally VYMI, the only non-US stock investment that I make, Vanguard's high dividend yield international ETF. So all of the ETFs right now, you'll note, are back in the green, which is nice to see. The stock market, little bit of turmoil, a little bit of sliding as we began 2025. There's always a bit of uncertainty when there's a new president coming into office. That's primarily what I would contribute that to. There's always tons of speculation as to what a new administration is going to do, what kind of policies they're going to enact that could impact the market and our investing. I'm not concerned particularly about any of that, especially when it comes to ETFs. There's going to be up weeks, up quarters, down quarters. No one knows exactly what the market's going to do at any given time, and that's why dollar cost averaging into ETFs is truly a stress-free way to invest, because over the long haul, you are going to make money dollar cost averaging into ETFs. There could be times when your investments are down, but the longer you stay at it, the greater likelihood you're going to find yourself way up on your investment dollars. So in total, up about $40 so far. So not unbelievable, only up about 3.5%. I have been paid out now $12.35 worth of dividends since starting this out. That would be about an extra 1% of investment capital thus far compared to what I've put in. And the annual dividend income, which is the primary number I'm concerned about with this portfolio, will continue to steadily increase week over week when I put in that $40. My yield on cost a little above 3%. So that means that every week I'm increasing my annual income with that $40 I'm investing, give or take about $1.25 every single week. And that does add up after a while. I know it doesn't seem like much, but slow and steady wins the race, and you have to be consistent if you want to end up with a nice pile of dividend income at the end of that rainbow, so to speak, to live off of in retirement. Thus far, as expected, the one that is projected to pay out the most in annual dividend income is going to be VYMI. Typically, that's going to be the highest starting yield among these 8 ETFs, with SPYD very likely being the number 2 in that particular slot. In terms of dividends paid out, VYMI has paid out the most so far at $2.31, with SPYD just slightly trailing at $2.19. But I would say that, every time I do one of these episodes, I like to remind you to celebrate small victories, small milestones, because it can sometimes it can be a little bit frustrating how long it can take to get your dividend income up to the point where it feels like it's really starting to make a major difference. So this particular episode, I'm celebrating reaching $150 invested into each of the 8 ETFs. Only 2 left that don't have a full share: VIG, the Vanguard Dividend Appreciation Fund, and VBR, the Small Cap Value Fund. Those have the highest share prices, as you can see, both above $200 right now. And again, I'm not particularly concerned about share count. I'm more concerned about how much dividend income that these are going to produce. I had a third fewer shares of SCHD a couple of months ago, and then they did that 3-for-1 stock split, and that reduced the price down, but it also increased the share count. Doesn't really matter that much one way or the other. Having a lower share price can be a little bit more exciting for some folks because they like to have that almost mental victory, if you will, of having a higher number of shares that can be a bit more pleasing or exciting to you mentally. But just know that the best thing to track is the amount of dividend income that you are expected to receive year over year, and to make sure that this number continues to go up. And while the dividend increases for these funds, for the most part, was not as good as it typically has been in years past, we're doing a nice job overall on the share price. And the more shares that we have, the more money invested. When dividend increases do come through, whether they're 4%, 6%, or even 10% plus like we got with SCHD, the bigger increase that is to your annual dividend income. You'll get to a point where a dividend increase year over year from an ETF will increase your passive income by even more money than the amount of money your actively invested new dollars are adding into the equation. It does take time, does take patience and perseverance, but if you do it the right way, you will have a house of bricks in terms of passive dividend income to enjoy in retirement. So that's what this channel is all about: age-appropriate ETFs, spreading your money around, and watching the passive income grow. This is Colby, the DGI Crab. Email me your questions to dgicrab@yahoo.com. The Great ETF race is back and stronger than ever here in 2025, every other Tuesday I'll see you 2 weeks from now for another episode of the Great ETF Race. But in between then, you better believe there's going to be plenty more dividend-themed content coming your way. Talk to you next time.